Hi, my name's Wendell Zerb. I'm here to talk about Exeter Resources. Just a little better background on myself. I'm new to the President and CEO role here at Exeter. 25 years in the industry. I started out with over 10 years of experience in both mining and mineral exploration, that background being geology. Transitioned into the financial sector about 17 years ago, and I've been in capital markets since my recent posting here to Exeter. Just a little bit on that. Most of my stint in capital markets was involved as a mining analyst, but also was head of institutional sales and trading at an investment dealer, and I headed up a U.S. subsidiary as President CEO. So lots of experience with regard to the mineral exploration business and mining, and I'm really looking forward to expanding and using that knowledge towards my role here at Exeter. So just moving on, Exeter Resources, we're listed on the TSX under the symbol XRC, on the New York market under the symbol XRA. Cautionary statement, this is typical of presentations today. There will be forward-looking statements involved in this presentation. So why invest in Exeter? There's a number of criteria that drew me to this particular company. The first thing is the company, for a junior, has over $52 million in cash today. That's a treasury that allows us to expand and do several different initiatives, which I'm going to talk about. But the first thing is our key asset, Caspiche. It's one of the largest pre-feasibility stage projects in Chile. It's a copper-gold porphyry system. We don't anticipate any fatal flaws associated with developing this particular asset. Just as a little bit of background, it sits as one of the top 1% of global gold deposits by size. In reserves, not resources, there's 19.3 million ounces of gold and 4.6 billion pounds of copper that sits in Caspiche. What's also important to note is that it's located in Chile. There's low political and permitting risk associated with this jurisdiction, and there's top mining labor skills that are also associated with the region. Exposure to leverage on gold and copper is significant with this particular company, in part to the large resources of gold and copper and to the relatively small market cap that Exeter has today. We think that Exeter is clearly undervalued. There's a number of different criteria that we can look at, and in this presentation I'll cover a little bit of that. Some investors are not aware, but outside of the very large asset of copper gold, there's also a significant oxide zone at Caspiche. It's 1.4 million ounces in proven and probable reserves. That's on a gold equivalent basis, and I'm going to talk about some initiatives towards exploiting the oxide component of Caspiche. And then another initiative that we have pushing forward is two different drill programs on some Mexican projects that we've recently entered into joint ventures on, and I'll expand on some of those different initiatives as I go through this presentation. First thing to talk about is capital structure. Today there's 88.4 million shares outstanding, 100.3 million fully diluted. Management and insiders own about 8% of the company, and about a third of the company is owned institutionally. The rest makes up the retail component. A little bit about the management team. As I mentioned, I'm new to the President CEO role, geology and capital markets over 25 years. But also within our group, we have some very experienced explorationists that are associated with the company. And on the development side, we have some talented engineering people also associated. And then on the financial side, we're also quite strong. So we believe this is a strong management group and a strong board of directors to be able to proceed and advance our projects. Just a little bit about Chile itself. I mentioned before that it's a strong place to be associated with mining. It ranks 18th out of 93 countries for being a positive mining jurisdiction by the Fraser Institute, and it's #1 in South America for mining. A little bit about the location. We're located just to the east of a major mining center in northern Chile. That mining center is Copiapó. We also sit just to the south of Kinross's Maricunga mine and just to the north of Barrick Kinross's Sericoseli deposit. There's very good road access. We follow the main Maricunga road access. What also parallels that access is a power corridor, and about 12 kilometers from that power corridor going to the Maricunga mine, our road access goes to the Caspiche deposit area. Again, I mentioned briefly just the size and ranking of Caspiche. It really is a very rare deposit and sits in the top 1% of global gold assets by size. These are very rare assets. And I think what's important to understand is as I go through this presentation, just how few of these deposits are on the planet and how few are actually in the hands of a junior mining company like Exeter. A slide here that I've borrowed from US Global Research shows a number of the different discoveries that took place from 1991 through to 2012. And what's really important to understand is that as you come into the last 5 years, there's been very few very large gold deposits that have been discovered. One of the last ones that was discovered was Caspiche. Many of these others are in the hands of major mining companies today. So again, it just goes to the scarcity of this type of an asset. I'm going to talk more specifically about the Caspiche project. I mentioned before two different components. One is an oxide gold deposit that sits very close to surface. There was an original pre-feasibility study done in June 2011. On an NPV 5%, it was valued at about $330 million. That's using 1320 gold. I'm going to talk a little bit about more of our oxide initiatives and how we might re-look at that study that's hopefully a little bit more suitable to a junior mining company versus a project that might be driven by a major mining company. The other study that was completed last year, in January of 2012, was a pre-feasibility study that combined the oxide deposit and the very large sulfide deposit. On an NPV 5%, that generated $2.8 billion in value. Again, a very, very large project and a rare project for a junior to have in its portfolio. Just a little bit of background on the proven and probable reserves. There's about 900 million tons of material grading 0.58 grams per ton gold, 0.24% copper, and that translates to 19.3 million ounces of gold in reserve and 4.62 billion pounds of copper. If you look at it on a gold equivalent basis, that's over 30 million ounces of gold equivalent. Within this presentation, you can see the mine layout, and this is part of the mine layout that was developed in the pre-feasibility study. And in this particular scenario, it was a super pit scenario that was developed along the lines of this pre-feasibility. One of the initiatives that we have is, if you look at the pre-feasibility study itself, it's an enormous initiative. It's $4.6 billion in capital to drive this forward. It generates about 1.2 million ounces gold equivalent a year over a 19-year mine life. And even though that's a fantastic asset for a major mining company, it's certainly not an asset that can be developed by Exeter Resources. Another thing that's really important to understand is that in today's environment, there's been different issues associated with some of the major gold companies. Barrick has had problems with CapEx overruns at its Pascua-Lama operation. Previous to that, Kinross problems at Tasiast, and Agnico Mining has had problems at its Meadowbank project. One of the initiatives that we have pushing forward is to re-look at Caspiche in a different way, to look at it more from a mid-cap scenario, and maybe more appealing to even a major mining company today. One of the value creation initiatives involves re-looking at that from a standpoint of looking at the higher grade core that sits at Caspiche. There's not many of these deposits that have a zone of high grade, but this particular deposit does. And one of the initiatives that we've started is just to do an internal look at if there's a methodology to come and approach this asset with lower capex, which would require lower power requirements, lower water requirements, and again, just look at it in a different way that might be more appealing to the mining community today. Outside of that, we're going to continue with optimization studies, and that means to look at water initiatives, power initiatives. We're going to maintain community relations, which are extremely important in any mining operation, just to make sure that we're setting ourselves up to de-risk this project in the best manner possible. One of the initiatives that I just mentioned was a water initiative. Working in the Maricunga region of Chile, it's very important to be able to secure water. We've been drilling on one of two exploration concessions, our tenements that we have in the region. This is our Cuenca 1 tenement. We have completed drilling on one of the drill holes, and we're working on drilling on a second drill hole. On that first drill hole, we did encounter water. Initial tests are quite positive, but what we're going to do is going to push forward on understanding what kind of water we've intersected and look to the methodology of how we might secure that water pushing forward. We also have a longer-term initiative in the area. We have another exploration tenement called Cuenca 3, which we're going to be doing some geophysics on shortly, and that's going to be potentially tested for water moving into next year. We also have a surface rights option on water. It's an option that gives us the rights to a total of 300 liters a second. We're evaluating our interest in that surface water, and we're also looking at other initiatives in the area to secure water for both the Caspiche oxide zone and potentially the Caspiche sulfide zone. One of the things that we're not pushing forward on right now at Caspiche is our exploration initiative, but I just thought I'd note that there is a number of different targets that still remain at Caspiche that are untested. I have a slide here that's looking at the Caspiche exploration potential, and geophysically we have several other targets that are in close approximation to Caspiche that show a very similar geophysical signature. At some point in time we'll potentially test these targets, and again with the longer term potential to define more mineralization in this particular belt. I mentioned earlier that one of the initiatives is the Caspiche oxide zone. Again, I mentioned proven and probable reserves of about 1.4 million ounces gold equivalent. And that again is in reserves. There's many other companies out there that have projects that would have a larger resource base, but not necessarily reserves. The study that was originally done on the oxide zone was done to drive a high NPV. It was a very short mine life, a 5-year mine life, 210,000 ounces a year, and it produced an excellent NPV of about 330 million using a discount rate of 5%. Even though that study was very positive, for a junior to advance that, or even in a mid-cap mining company, that 5-year mine life is just too short. So we've started some internal studies to maybe relook at this in a different manner, in a manner that's maybe more appealing to a junior mining company. The initiative would be a 10-year mine life, approximately 100,000 ounces a year production, and what we'd be trying to do is reduce the capex requirement, maybe put some of that capital requirement into a sustaining category, and again, just make it a little bit more appealing for a junior mining company versus this study, which again, just was driven on producing the best NPV possible. So that's one of the initiatives that we're starting here at Exeter. Just on a comparative basis, there's a number of major oxide deposits that there's comparables for. And again, Caspiche on a reserve basis stands out as having one of the better or the larger reserves associated with our particular area. even more on the comparative basis, what I've got listed is a series of different companies and their assets, Agnico Eagle and their La India, Midway and their Pan deposit, Sullivan's deposits, Atacama Pacific, Argonaut, and Exeter. And what's important to understand is if you look at the NPV of all these projects, the Caspice oxide deposit is very significant. We generate, again, a 330 million NPV using 1320 gold. Well, if you look at some of these other comparables, they're similar or have a smaller NPV, and some of them use a higher gold price to generate that NPV. So on a comparative basis for value, the Exeter oxide zone is quite significant. What's also important to understand from a value basis is the market has not given us a lot of value associated with not only the sulfide zone, but also our oxide zone. And on an enterprise basis, the value that's in Exeter today is considerably less than what is given to some of these companies that have been advancing just an oxide project. Some of the benefits to our oxide project versus some of these others is we have a very, very low strip ratio, 0.26 to 1 versus others that are up to 2 to 1. So from an operating cost standpoint, there's a big benefit to the Caspice oxide. Also, our leach kinetics are quite strong. We use a 2-inch crush, and it generates 78% recoveries in a very quick leach cycle. So we have some big advantages to this particular oxide zone. Again, we're going to look at it in a different way, and from that we're going to determine how we may push forward on the oxide zone at Caspice. I'd like to talk a little bit about our Mexican exploration properties. The key initiative behind this is that Exeter has 52 million in cash. Historically, this group has been very, very good at exploration. There's been 3 discoveries by this group, and taking a small portion of our capital and putting it into exploration projects that we think could be a value add to shareholders, we think is a prudent way to push forward in spending some of that capital. We recently entered into 2 different joint ventures in Mexico. One of them is the Angeles project, where we have the option to earn up to 70%. The other is the La Buena property in Zacatecas State, and we have an option to earn up to 60%. Important in our initiative is that we're looking in the Americas. We're looking at areas that are politically safe, that are socially in order, and that have excellent infrastructure, so that if we make a discovery, we have all of our blocks in order, so to speak, so that we can push forward on these particular projects. A little bit about the Angeles project. Again, it's in Sonora State. It's surrounded by several different operating mines. Excellent infrastructure. It has a power corridor just to the east. It has a road corridor just to the east. And because of that, we think that if we do make a discovery, it's in an excellent location to be able to advance it. What we're doing is we're looking at Angeles. There's a 2.5 kilometer zone of structurally controlled gold and silver mineralization. There's also some copper associated with this. Over this entire 2.5 kilometers, it's never been drill tested. Back at the turn of the 1900s, there was a US company that was in this area. They were mining from one area along this 2.5 kilometer zone, put in several different inclined shafts, and some historical records show 12-foot widths, mining grades of 6 to 16 grams gold, over 100 grams per ton silver, and some associated copper. So those are nice figures. We're going to go in and we're going to test the area around the La Bonanza zone. We may also expand into the area in around the La Verde area. Our first year work program is $1 million on about 2,500 meters of defined drilling in these areas. What I also have here is a picture that shows the trend of the zone of mineralization. It's looking from La Bota area to the east-southeast, a long trend to La Bonanza. The La Buena property in Zacatecas State sits about 9 kilometers to the north of the Penasquito mine of Goldcorp's. It's one of the largest gold mines on the planet. The La Buena property shares very similar geology and is also on the same structural trends as the Penasquito operation. What we were interested in this particular project was one particular zone. This is the Julia target at La Buena. Julia target has a series of different geological and geochemical signatures that are quite interesting, and I'm going to speak specifically about the Julia zone shortly. But our first program is going to be to complete some additional IP geophysics in the area around Julia in order to hopefully define new zones of mineralization that we'll target. But the key program that we believe is going to start end of August or into early September is also a 2,500 meter drill program testing the Julia zone. What's important about the Julia zone is there's a defined high chargeability geophysical signature that is likely defining sulfides at depth. We think the depth as defined by the geophysics is about 75 meters to about 300 meters below surface. Also associated with the Julia zone is a low resistivity anomaly. A low resistivity anomaly is often defining an alteration pattern that can be associated when a large intrusive center comes up and alters the rocks in around this particular area. Not only do we have the good geophysical signatures associated with this target, but geochemically, all the rocks on surface are anomalous in gold and in base metals. The rocks are also altered and have fracture patterns, which is a good indication that there's a mineralizing event that's taking place. And there's other topographical features that suggest that there was an upwelling intrusive center and then a depression that was formed by the collapsing of this particular system. So the area that we're targeting at Julia is a very sizable zone. We think it's the type of target that could be a company maker type target. It's also considered a high risk target, even though it has all these very nice characteristics. But these are the type of targets that we think would be very impactful for Exeter and its shareholders should we be successful in this drill program that's coming up. Just as a quick comparable, I have a slide here that shows the geophysical signatures of the Camino Rojo deposit, which was purchased by Goldcorp in February 2010 for $308 million. It has a very similar chargeability associated anomaly. Just the La Presa zone that is represented in this particular slide has about 3.5 million ounces of gold associated with it. And you can see the comparable size of Julia should we be fortunate enough to intersect similar styles of mineralization. It could obviously be quite, or from my mind, it could obviously be quite significant from an Exeter's standpoint. So we like the Julia target, we like the zone or the rest of La Buena for potential to host several of these. And again, we'll be testing this later in the year. Just as a conclusion to all of this, it comes back to what I was describing at the beginning of this presentation. There's $52 million in cash in this particular company. We're prudently going to use that, pushing forward with de-risking the Caspiche project. We're reevaluating how we look at the Caspiche project. First initiative is a smaller scale oxide zone, a smaller CapEx initiative looking at Caspiche in a different way, and that is looking at the high-grade core to the zone of mineralization. You know, this is an absolutely significant copper-gold project that not many juniors have. So as we push forward on this, we're going to try to continue to create value while we de-risk this particular project. On a value standpoint, I had mentioned that there's different ways to look at Caspiche, but Caspiche NPV 5% is about 25 times the current market capitalization of the company. So one methodology for looking at how Exeter is being valued today If we look at different project transactions that have taken place in the Maricunga Belt in Chile, back in 2007, Barrick Gold purchased 50% of the Cerro Caselli deposit from Arizona Star for $805 million. The market cap of Exeter today is just over $100 million. At that point in time, they paid about $44 an ounce in the ground. Another deposit in the Maricunga area is El Moro. It was recently purchased, or 70% of it was recently purchased for about $613 million, or a value of about $34 an ounce in the ground. If we look at where Caspiche is being valued today, we're currently being valued at $4 per ounce in the ground. And if you take the cash out of the company, it's $2 an ounce in the ground. I've been in this business for a long time in the capital markets area, and this is one of the lowest valuations I've ever seen in the industry for an asset like this. So we believe that we're in one of those troughs in the cycle, and that eventually we're going to see higher valuations associated with this particular deposit. Just as a final conclusion, again, and as a reminder, we also have the oxide zone that we're going to reevaluate, and we also have the Mexican projects that we hope to create some news flow with over the next 6 to 12 months. Thanks for listening.